Okay, so in this video, again, these are shorter videos. Some of them are long videos that really cover the material, so there's no way to shorten them. But these short synopses or summaries try to consolidate what I'm learning and what I'm trying to teach. So right here, um, when Wyckoff talks about volume, he's basically looking at a couple of key behaviors. Obviously, the climax or the volume off the bottom. Climax that ends trends. Climaxes that end swings. The breakout volume. We basically had three main types that he had described. And he probably described others, but there's just three I want to focus on in this study. Was climax, breakout, and change of behavior. Alright, those three: climax, breakout, and change of behavior. Volume is the indication, but it's up to the trader to determine the meaning. Alright, so I gotta have the facts with indications, but it's up to the trader to determine what it means. Alright, so what I wanted to do was kind of do a comparison of the trend that you see at the bottom chart, this recent breakdown, right, with what volume with the study that he explained. So let's take a look at the top. A couple of things he explained was that there was high volume climax here, which was very high, by the way. It was really, really high volume, and that was a climax, and it was on 5 million shares, and that was a very, very high amount relative to the entire uptrend. Relative to the entire uptrend, not just the up or down swing. Okay, so there's a big difference when you're looking for high volume relative to the trend versus high volume relative to like the last, 5-6 bars, or like 4 to 5 bars in a swing. Alright, swing climaxes are different than the climaxes that are relative to the trend. Alright, that's the first thing. So here you have very high volume relative to the entire trend. So if you look at this bar here, right, then this volume here, what we want to do is do a comparison relative to the entire trend, because this is a lot of volume. It's much more. So let's just say the trend off of this springboard area. So from here to here, because that was the last correction, right? So not even a correction, but it's like a very strong pullback. So and there's like accumulation, etc., etc. There was accumulation here. I'm not going to go into that, but that's this piece over here is what is going to be analyzed. So where is the line? Oh man, I'll find this. Alright, so what we'll do is draw the line across here. Line. Alright, right there. Okay? So you see that this volume here on the rally is the biggest up volume, meaning volume on the green bar. Volume on the green bar since all the way back here. So that there are multiple swings in here, and out of all the green bars in the swings, that is the biggest volume. Okay. Now you might be wondering about this volume. This volume is climactic, and it's relative to the swing, and basically they bought it all back here after the pullback, but I'm not going to go into that. What we're doing is comparing the green bars and the green volumes and seeing that that is very, very high volume. It's bigger than almost all of the bars. Maybe this bar has slightly more volume, but it's a red bar where they bought the low. You know, this here is selling the high. Okay, but now do we know that? So let's take a look at the other indications. The second indication, bearish indication, was that it was a lower high, lower low, lower close, meaning it's a red bar. Okay, here you have a lower high, you have a lower close, but you don't have a lower low until the second bar after it. Okay, the concept here is that it can't hold. Not only is there no follow through, but it just cannot hold. Get it? It couldn't hold here. Not only that, but after the climax, you were introduced to another concept over here, which was the change of behavior, meaning the biggest volume, red volume. Before the climax was the biggest green volume. Now we're looking for the biggest red volume, alright, in the trend. He said that this volume was the biggest volume on the reaction in the uptrend. It turns out that this bar right after it was the same thing. This bar right here after it is the same thing. You have the exact same situation that occurred in 1930 on the climax and the change of behavior that you had on the most recent correction. Exact same. Alright, now I mean, by exact same I mean like you got a climax followed by a change of behavior. Alright, that's the key. Alright, so you have the first concept is that of a climax. You see it come here, it didn't come here, it didn't come here, it didn't come here, it didn't come, well, this was in the correction, they were buying off here. But on top of this swing, this swing, this swing, this swing, that's where it came. After multiple swing highs, it finally came on a new high. On a new high, it came in. The volume came in. And right after it, you had the biggest volume in the entire trend. Right there on a down bar, which is the change of behavior. So you got the concept of climax. You got the concept of change of behavior. Now the third concept is that of the breakout. Where do you see the breakout? You see it right there. And I'm not like writing this. I'm doing based on an indicator that's just finding high volume. So there's no like, me editing it or whatever. Right there is your change of, the breakout. Okay, so you have your climax, you have your change of behavior, and you have your breakout. Where was the breakout on this chart? It was here on this bar where he says the volume increased right there. The breakout volume came right here when it took out these lows. So that's your breakout volume, and based off of the climax, the change of behavior, and the breakout with the left and the right hand side indicating to him distribution, he said that this second level of support would not hold. So again, these are the three concepts. So let's take a look at some other high volume indications that, to interpret them. This here is a high volume indication, the red bar, on the pullback. Okay, so what you have here is you have a rally, and then you have a pullback. Okay, now the pullback tests the rally, and you have a lot of volume. So right here, what's going on? Right here is a climax that ends the swing. Now, sometimes you don't know, so you want to take a look at one more bar afterwards. That bar afterwards was a lower high, higher high, higher low, higher close, which means it's going higher. Okay, right here in this climax, you had the transfer or exchange, meaning people sold and the CM bought. Here. Where else do you see this? You see this again on a rally, right? Then you got a pullback. Oh boy, here we go. Now you got a pullback, and right at the lowest bar, you have high volume. Can you explain to me why the lowest bar on the pullback has high volume? It's because they're buying the low, but they're buying the low in a swing with a rally in the background. Remember, rally, pullback, and then now they're coming in to buy what? Buy at discounted prices on the pullback. That's all they're doing here. So this is different type of climax. This is the type of climax that ends the swing. It can occur on the top, it can occur on the bottom. In this case, it's occurring on the bottom because they're buying at discounted prices. However, you want to have at least one bar more to give you some, indication, right? So over here we see an immediate green bar with the higher low, a higher high, and actually a higher close than the bar before it. Even though it looks like the close is less than the open, it's actually a higher close than the bar before it. Bullish. Here you had high volume, but I need confirmation because I have this thing where I don't know. I just like to have confirmation. So over here you have that higher low, higher high, higher close, and here you have a higher high, higher low, higher close. That's it. That is confirming. It's more confirming than anything else. Same thing here. Over here on this climax, why I want one more bar is because it helps. I don't know. I don't know how to say it. Yeah, it increases the likelihood of the judgment. Why? Because a lot of people are going to look at this. They're going to draw a line over here, right? And they're going to think this is a breakout. You see? So this climax to one person may look like a breakout to the next person. So how do you know this is a climax or a breakout? You know after that one more bar. It's like, okay, if it broke out, what happened? Oh shit, it went right back down. And guess what? It went down on more volume than it broke out on. What does that mean? That means it's not a breakout, it's a climax. And it's on the top of a 1, 2, 3 green bars. It's not like tightening and then breaking out. So that helps with the indication. Alright? That helps. That one more bar afterwards at least helps me confirm and be much more comfortable with taking a position. Very, very comfortable. Anyway, so let's take a look at some more examples. You had it's going up, it's going up, it's going up, and just use common sense and say what they're going to do. They're going to try to sell the high, right? But you want at least one bar confirmation. So here you have high volume, but after that you don't really have any type of confirmation. I don't. So I want more. oh shit, there's another high volume bar right there, right? There's another high volume bar right there. And this time, bang, lower low and lower close, confirmation. It's giving more confirmation about what the bar before it is, that indeed it is some type of selling pressure. And it goes down. Here, when it goes down, right, it goes into, I'm not going to go into each and every bar, but like after they do this, what do you have? You have basically a breakdown and all of that. Here, you have a climactic situation. All right, why this entire rally, and then you have the pullback, and at the bottom of the pullback, you have a lot of volume and a lot of range. That's good. But I want one again. I want this concept of one bar more confirmation. Right there, we have a higher low and a bigger close. After that, you have this threatening bar, but guess what? Again, it has no follow through, and you have a green bar right after it. That is telling me something. Have a higher close, and it has no follow through. Then it has high volume on the upside. Now, people may look at the form of this and say, oh, no, 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 it's bearish. No, it's not. It's a higher high, it's a higher low, and it's a higher close. Bullish. And this is where the reaccumulation happened from the climax onward, and then the breakout right there. Anyway, let's take a look at more examples. There was something here, but I don't know, indicator didn't catch it. I can't catch them all. But this one right here, see what happened. Basically, high volume down, right? Again, I'm looking for one more bar of confirmation, and I got it right there. The green bar right after it. The green bar after it was a higher low, higher high, and a higher close. Which means what? It means that the transfer was complete and they are in a rush, they're going to mark it up. Right? Same situation here. Here you have a position that's very, very important right here. Like it went below this like spring position on heavy volume, but again I want one more bar, and bang, right there. What's that mean? That means they're done with the exchange of inventory and ready to mark up. Bullish indication right afterwards. Okay, more examples. Here, let's mark this. This was a correction down. Okay? This is a correction down, and you have high volume right here. Right after it, you have a bullish indication. Why? Higher high, higher low, and a higher close. They're buying. This is an exchange of inventory. Then they do a spring, right? And this one is also on high volume, so I'm thinking, this looks like maybe it's gonna go lower. But right after it, it's doing what? It's giving a green bar with a higher close. There's no follow through. So you're putting this together and saying, scratching your head, I don't know. But after that, look at the green bar, which has a higher high, higher close than the prior bars. Now again, it's okay, you can restrict your judgment and be like, you know what, I'll just wait. Then you get a rally. Alright? So now you got a rally, you got a higher high, that is confirmation. When you have why? Because the climaxes here have been taken out by upside movement right here. So the exchange is done and they're ready to mark up. Now you get a nice pullback entry. So see other examples right there. is a nice one. They go down, one more bar, high volume. Okay, they're buying. They're buying. Mark. You want to mark that area. It goes down and reverses. So it's basically a spring of that area. Other examples. Alright. So price over here, this is high volume. Right after there is a red bar. So there's some selling here. Okay. And over here you have high volume, but it continues to go up until here. This is very, very important. Why? Market is going straight up, and this is the first red bar that has a lot of volume. A lot of red selling volume. So that is your change of behavior. Okay, now as you know, there's traps. They can be before or afterwards. Here you have your change of behavior, and here you have your upthrust, where basically it trapped the buyers right there. That's when the sellers came in. They had that one bar breakout and an immediate break. It's basically failure. So that's what's going on right at the top right there. A rally unable to hold and comes right back down. Alright. Why is this a change in behavior? It's the heaviest selling volume in the trend, not just the swing, but in the trend. Here it's a little bit hard to decipher what this is here, because it's not a climax, because it's not up there like really high. So it's a little bit difficult, but hey, whatever. If this H was up here, that would be very clear indication where you have a change of behavior and you have a climax, and then you have a reversal. But again, it's not going to always be so clear. Here you have a rally, you have a pullback, and you have a continuation followed up by high, low, higher, high, higher close, confirmation, pullback, and go up. This again was a little bit confusing because you have that high volume. It looks climactic, and it basically flushed everything out, went up to that area, pulled back, and continued. But this is a little bit confusing because it looks like a climax and change of behavior, but that high-end close and all that, it's sometimes they're just not clear. You can't figure it out. Other times you have high volume up, which reverses to make the market go down so they can get the inventory and then rally it. That's the case over here. Other times it's just breakouts. So, like right here, right there, right there. You breakout and you have confirmation in terms of another green bar, and then you have a really nice pullback to set you up, put it in a springboard position, and go crazy. Where else do you see? Where else do you see these indications? Right here, it is very clean over here, where you have a rally, pullback, up thrust, and finally a clean break. Even if you can't read the rest or it's unclear, you know that that's the breakdown and that's the test, right? What happens over here is the warning. What is the warning? Right here, where you have a lot of volume, you have a lack of ability to close lower, followed by an immediate green bar, as I've been discussing. The one bar, afterwards, telling you a lot. So this was a break, a test, and when it went down, they basically bought it. And this was also then on the springboard. Let's see. It's either here or here. I don't know. I think it's over here. Anyway, so this is another example of markets that are basing out, and then bang, right there is your high volume indication. That's your breakout volume. That's your pullback. The high volume climactic action here. Now this looks very scary. Like you're looking at this, oh, it's going to go down, oh, it's heavy volume and all that. But again, just wait for one more bar and you see it's green. So what's that mean? It means don't be scared. That's what it means. You have a base in the background, you have a breakout, you have a pullback, you have high volume selling. What does that mean? That means that one side's selling and the other side is buying. The side that's buying this red volume is smart money, and they're not willing to let it go down any further, and that's why it's green. Other example of catching a climax. This is an interesting one where you have that rally and you had a red bar. Okay, so like, this right here is having a lot of difficulty taking price further. Okay, so what you want to do is immediately mark this area and note that there's a lot of difficulty. Alright, you could tell by the blue that it's unable to make progress in the closes. So then what happens? This right here is your climax. This is what they call a hypodermic maneuver to, I think it's called made to order hypodermic maneuver. And the whole purpose of that is to distribute and wrap up the campaign. So that move, but now how do you know? Again and again, as I explained, one bar here is red. Lower low, lower high, lower close. Indication that this was a hypodermic maneuver to exit at favorable prices. And they did. They did right there. Where was the change of behavior? Again, based on volume alone, it was right there. That was an indication that they're selling. Now I know that the range isn't a lot, but so what? You know, if they can sell it in a tight range, why not? So usually what happens is after this you have a breakdown and you have that right there on that high volume breakdown right there. You have a test and you have some continuation. But again, the markets were very strong. So alright, so let's go through some more examples just to beat this to death. It goes over here, goes up. Where do you get it? You get it right there. Selling pressure. Goes up, bang, right there. That was your change of behavior from the highs. Right there. And again, like these markets, this was very strong then, so it's not easy to detect. Right there, they're ready to launch. Right there. Ready to launch. Bang. And right there. Other examples. This was selling. Right here tried to go high, but it was selling. Right there. There was high volume here as well, but it couldn't do anything. And a lot of times after you have that distribution type of action with the climax and change of behavior, you'll have a high volume breakdown right there. And what's really nice about it is many times you'll get a test. Right there. But if the market is strong, like the amount of progress, down move you get, it's not that great. You know. Here you had a nice little crack of this area right here. that told you price was going lower. So that's breakdown volume right there. That's breakdown volume. Sometimes you have high volume afterwards, but again, like 1 bar and you see it go right back down. So it's a weak test and a break. Heavy selling. This one's a little hard. You know. Nice continuation right there. With demand off the lows where it goes down and then goes up. See? Nice continuation. 1 bar follow through, test and run. Right here, breakdown volume. Test, retest, comes down, but not that much. Here you have breakdown volume 2. Right there you have breakdown on 2 bars on heavy volume. So you have a test and goes down. And what's nice is like you can see it rally and then rally, like the left shoulder head, and then make the right shoulder test and break. So you see the left, the head, the right test, go down. Anyway, so one final example over here is there's your selling. There's your break. Okay, selling. It tries to go up, fails, breaks, comes up, termination. This high volume terminates the trend as indicated by the bar after it, and goes down, tests one more time. So that's your change of behavior right in here. That right there, I don't know what that is. It's not a climax, but it's an attempt to go up and it fails. So that high volume, you have people that are trapped. Okay, especially after this break, it comes up here. That's what I've been explaining. There's the down move, and that's the up move. Notice how this high volume is at the top of the reaction, not the bottom. It's at the top of the reaction and immediately goes red, which means this high volume terminated and they sold into it. And there's your break. It's another sign of a break right there. Breakout volume right there. Goes down. This is your first indication of buying. Is right here. Now how do I know? You won't know immediately, but that type of rally right there is indication that what? There's a transfer and they want to take it higher. So immediately green bar and a rally preceding it is bullish. Alright, it's just like your selling climax and your, I don't call it automatic rally, but it's a rally. Very nice rally, pull back, pull back, pull back. And it's not obvious here, but this volume here is more than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bars. That came in right there. And again, wait for it, and you got your fall through. Right there. High volume here, came back, they bought it and bought more, and there's your reversal. So this type of it can get really confusing, so it's best to just have like 2 or 3 behaviors in mind: climax, change of behavior, and breakout. Of them, the easiest will be the breakout. Climax and change of behavior will be easy if they occur together. But if they don't, you want to see what happens afterwards. Okay. Anyway, I'm done. Thanks. Bye.